Hi friends. Today my topic for the day is about intraday trading and how I plan the intraday trading and execute it. With my experience in this field, starting with the option buying for about 3 years and learning from that, and then later on moving to futures and equities, what I have learned is in intraday trading, you have to go with specific plan and execute that plan in a very disciplined approach, process oriented approach. If you are drifting away from your process and fall into the trap of emotion, fear, or greed, you end up in losing day by day, month by month, year by year. Now, this is for sure. The success rate in intraday trading is only 5%. That is what the data says. So, what I do basically is I have a list of about 12 stocks which are non Nifty 50, non sector stocks. So, I basically analyze these stocks one day before, kind of segregate them as to which can move up the next day, which can move down the next day. Now, as soon as the market open or about 9:30, when your 15 minutes of the market movement has happened, I kind of take a view on Nifty, whether it is uptrend, downtrend, or sideways. If Nifty is an uptrend, I look at in my shortlisted uptrend stocks which are potential to go up. If Nifty is downtrend, I look at the shortlisted downtrend stocks which one can go down. So that is the approach I take. In terms of the risk per trade, now this is very, very important. Risk per trade and risk per day. There are two things here, right? So I work with a capital of 1 lakh. Now my policy is risk per day and risk per trade is 2%, which is 2000. Now, what do I mean by this? Even though your capital is 1 lakh, you don't need to basically deploy that entire capital. Depending on your SL points. So, if I am buying a stock at 100 and my SL is 95, for example, so my SL point is 5. So, I can only buy a quantity uh, 2000 divided by 5, which is equal to 400. So, I repeat, if I am buying a stock at 100 rupees and my SL is 95, so I have a SL point of 5. So, SL point into the quantity is my risk per trade or risk per day. Now, I do have this kind of a rule book, which I call, which is basically I follow certain guidelines as to maximum 3 trades per day, and more importantly, maximum 1 loss per day. If my first trade is loss, I will not trade that day. So the biggest mistake or the error happens when you try to recover your loss on the same day. And second point is, don't hold on to your previous day's bias very tightly. You have to be flexible. Sometimes what happens, you have shortlisted some stock for uptrend. However, the moment there is downtrend, and you have to look at that resistance, support level, and all that, and kind of be quick enough to be flexible to adapt and take the trade accordingly. Very watchful on support and resistance and round level. This is very important. Suppose you have a stock which is at 95, you don't want to take an uptrend in that, because at 100 level there is possibility of some kind of a volatile movement, or it may hit 100 and come down, right? So you would prefer to take a trade which is above 100, maybe 103, 105 of that order. Same way with the downward trend. You don't want to pick a stock which is at 105 for your short selling, because at 100 there could be some support. So as I mentioned, 1 loss per day and no more trade. And if you are taking the second trade of the loss, I don't take, but if you want to take, don't take it immediately. Take a 15-20 minutes of gap, walk out of your trading seat, take a break, go for walk, go for cycling, whatever you want to do, and come back to the trading with a fresh mind and take the second trade. Normally, the trade taken after the loss is has a very high probability of losing. This is for the reason that the main motive of taking the second trade after the first loss is to recover the losses. So in the first trade you incurred a loss of 2000 for example. So in your second trade you want to recover that or at least gain little bit. Remember this, in intraday it doesn't work like that. You can recover your loss on the same day. You have to wait for the next day, come with a fresh mind and approach it in a different way. And I normally take the second trade or the third trade only the previous two trades are profitable or the previous trade is profitable, and try to take risk on the profit. What do I mean by that? Suppose your first trade you made a profit of 1000 rupees. In your second trade you can take a risk of 500, which is half of your profit of the first trade. So even if it goes, you ended up making a 500 rupees. Now this is just an example. Hope this has given some light on why 95% of the people fail in intraday, which I learnt it the very hard way myself, burning my fingers. Thank you.